we've seen this 100 times before, is when the market has no buyers, market makers recycle the same risk.
Yep.
And they have to keep dumping at each other on lower and lower prices, right? So whether it's you guys, it's just the market in general had no buyers, so nothing cleared. All of these people were farming, hoping for the future token, of which they don't know what the value is. They kind of market on the previous token price, and the token price just keeps going down. I'm guessing at the end of all of this, they're creating a bit of a death spiral of the token, and everybody's going to lose money, and that liquidity is probably going to dry up because that incentive seemed like a good idea to start with, and then as ever with incentives, you're not careful, they become perverse incentives.
The presence of non-fungible tokens, or NFTs, has lost importance in the digital world, where the distinction between reality and virtuality is becoming more hazy and in doubt due to the development of AI. This issue has caused reverberations throughout the art industry and beyond, and is not merely one of curiosity. NFTs were the talk of the town only a few years ago. They were viewed as a groundbreaking method of validating and profiting from digital art, offering a new avenue for artists to sell their work and for collectors to invest in rare digital assets. But the scene has drastically changed. Since 2022, NFT ownership and prices have decreased significantly, raising concerns about the future viability and worth of this category of digital assets. The use of AI and artistic production are both expanding at the same time. With the use of generative AI tools, anyone with access to a computer may now produce original works of art. Due to the demand for and use of AI art growing dramatically, NFTs value has decreased due to the ease with which original artwork may be created and converted into NFT LEDs. Has the democratization of art production unintentionally contributed to a decline in the NFT market? Although these issues are complicated and multifaceted, the ethical and copyright problems that AI-based art provides make it even more difficult. Whose property these products produced by AI algorithms ultimately belong to: the programmer who created the algorithm, the user who chose the inputs, or the AI itself? The AI art world is shrouded in doubt since these questions have not yet received definite answers. In this video, Raoul Pal discusses digital AI art and the NFT ecosystem. He provides additional clarification and outlines the direction he believes the digital asset class will take. As you watch, don't forget to subscribe, like, and leave comments below.
One of the things I've been thinking through with NFTs, and again, no surprise to you, but to other people, I think people need to think this through more, is assets within an economy, particularly status assets or excess discretionary spending assets in an economy, suffer when the economy shrinks. So we've seen it with houses in the meat space. We've seen houses, Rolex watches, Patek Philippe's, pretty much everything. As the economy shrinks, less consumer spending, and less recycled gain. So people aren't making any money, right? Everybody lost money last year in every single thing that they touched. So therefore, nobody's buying stuff, and you're certainly not rewarding yourself with a new Rolex because you've made a lot of money. So that seems to apply for the ETH economy as well, in exactly the same way. And we also find that assets tend to lag the business cycle somewhat. And so I've been observing this. Obviously, ETH was the first to bottom. You and I were pointing that out back in June of last year. ETH bottomed, rest of crypto bottomed, and then NFTs feel like they're bottoming now. You know, we're in that process of market clearing prices. And what was amazing, as I wrote about it in GMI, the chart of Rolexes and Patek Philippe is the same chart as Bored Ape Yacht Club.
It really is, huh?
Because it's almost the same buyer, right?
Yeah.
It's the same buyer with the same thing. And so, you know, when we're looking at the ETH economy now, it looks like it's starting to grow and come to life again. So I just look at this and think, crisis opportunities in NFTs. The issue is in what? Because all the good stuff, right? Art, just, you know, if we're looking at the ETH basing before Bitcoin moment and didn't hit a new low, it's the high end of the art market, right? It started decoupling and didn't fall. Some stuff, NFTs that are tied around kind of memberships, that's still interesting because you get utility, you know what you're getting. There are NFTs that have no utility, nothing else, like Red Guy or Crypto Dick Butts. Do they become iconic memes in the next cycle? Who the fuck knows, right? So it's very hard. The other thing that I'm observing is the rise of new AI art. You know, I'm obsessed by the Rupa Ernesto Life in West America. It's like,
Yeah, incredible.
it's striking, right? It's amazing. And then we're seeing some of the video format stuff as well. And how I get around that is, if I buy something like that, it's because I really like it. So I don't really give a shit if it goes down.
Yeah.
It's different if they start trading at, you know, huge prices, but you know, they're still at reasonable-ish prices. It's got to augment their creativity and not be their creativity. So
Exactly.
like, again, the Life in West America, it's kind of like X copies glitches. It's like a glitch photograph of this photorealistic, surrealist world. And it's like, you know, that's cool.
Yeah.
It's just cool because we hadn't seen anything like that before. Like X copy, you know, and his glitches. There's, you know, it's very interesting to see where some of this stuff is going, but it has to enhance the creativity. They have to be using it as a conduit and not it being the creativity.
Few entities have altered the Web3 scene as significantly as the NFT marketplace and aggregator Blur in the past year. It started to regularly compete with OpenSea, the former undisputed NFT marketplace champion of the previous 6 years, in November 2022. By February 2023, ED had overtaken the platform, outperforming OpenSea in terms of weekly trading volume by as much as $400 million. With the prospect of future airdrops, users of a number of airdrops continued to interact with Blur as the token rewarded platform loyalty and user engagement. By tying time protocol activity to token rewards, the company launched Mix, a lending protocol, in May with the goal of increasing market liquidity. Web3 onlookers started to worry if the marketplace's gains didn't come at a possible greater cost to the overall NFT ecosystem. Even though the aftermath of the token launch and Blur's Mix protocols witnessed activity and even secured the platform 82% market share and NFT loans. High volumes are attractive, but they frequently come from a small number of traders who are frequently accused of exerting an excessive amount of control over NFT pricing as a result of the platform's incentive structure. The cryptocurrency exchange BitGet has declared that it is fully debt-free, and that its reserves have hit a high of $1.44 billion. As Perbit receives an announcement, the entire reserve ratio of the exchange is currently 223%, which is more than twice the industry-required backing of 100%, or 1-to-1. The exchange reported that it has a reserve ratio of 454% for Bitcoin, 135% for Tether, and 171% for Ether, divided down into several digital assets. Notably, a spokesman for BitGet informed The Telegraph in an interview that the exchange has no debts that are not taken into account in the reported reserve ratio. The exchange's spokesperson said that BitGet is not listed as a creditor for any recently insolvent businesses, and has no ongoing debts or liabilities. The company representative added that the surplus big reserves it keeps in cryptocurrency, which greatly surpass the typical 1-to-1 backing, originate from income from transaction fees and returns from its investments and acquisitions. As the largest asset management in the world, BlackRock announced the start of a historic race. The price of Bitcoin has surpassed $30,000 per coin, more than quadruple its price in late 2022. Two shock crypto flips have contributed to the market's recovery. Now that Elon Musk has surprised traders with a bullish crypto prediction, Bitcoin and cryptocurrency are bracing for a capital inflow of $30 trillion. If any of the recent flurry of U.S. spot Bitcoin Exchange Traded Fund (ETF) filings is approved by the U.S. Securities and Exchange Commission (SEC. After the Ripple dispute with the SEC concluded with a court finding in favor of Ripple not being a security, things are looking up for the entire cryptocurrency ecosystem, including digital arts. The crypto markets saw a spike in assets. Some others are hopeful that this will mark the start of the long-awaited bull run. Do you believe that a bull market already exists, or do you believe that this is a trap? Post your comments in the space provided below and let us know what you think. Don't forget to subscribe, hit that like button, and enable post alerts. Thank you for watching.